Now that's interesting. There we go. Hey, Jill's here. How are we doing today, Miss Jill? Jeremy, Michael Durkin, Emmanuel. Cool. Todd, Eddie, Troy, Jill, Ashley, Chris, Carolyn, Stobolanda, Richie Rich. How are you all doing today? Is what it is. Huh. Imagine that. There we go. Valley, Jasmine, Javas, Tiffnut, Felix, Hall, Scratch Color. Scratch Chip Color. Well, here we go. Good evening, ladies and gentlemen. This is James from Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Taking you along for the ride for a safe, predictable, consistent 1% per week. Now, what does that mean? Well, that means I look at dividend stocks, specifically those that have consistently increased their dividends to their shareholders for more than 22 decades, 20 consecutive years. What does that mean? Well, that means 2 decades of increased dividends. A dividend is a portion of the profits. Okay? So, company has two choices. One, they can take the profits, put it back into the company for capital growth, or two, take all those profits, put them back in, and give those to the investors. That's us. We get a portion of the profits. We get the dividend. So if the company is profitable, we get more and more money. Okay, every year, increasing the dividend every single year. Okay, so anyway, let's jump in, see where we are, see what's going on. Last night we ran into a little bit of a snafu because we ran out of time before we got to look at all the stocks you guys wanted me to take a look at, which is kind of amazing because you guys have a single stock you want me to look at. Here we go. First one on the list today, Kohl's, KSS. I love Kohl's. I actually have me some Kohl's. KSS, Kohl's. What did Kohl's do today? Kohl's, well, Kohl's pulled back a little bit today as opposed to yesterday. See this right here? Down a little bit today as opposed to yesterday. Now, I have Kohl's at 17.15. It's currently at 15.30. The 15.28s, well, I can still get over, I could still get 1% for the week. Dylan, what's happening? CEO of my life. That's an interesting name. Omar. Umar. Is it Umar or Omar? Wade. H-Boy, what's happening? All right, let's keep on going. What software are you using? Okay, Umar, this is not software. This is a trading platform called Think or Swim. Okay? It's owned by Charles Schwab. You can use it for free for a couple of months. They'll let you. Ryank, what's happening? All right. The business specialist, how are you doing today? All right. Terry Smith, how are you, sir? Wonderful, wonderful. Let's get the ball rolling. That being said, you like the shirt? Cool beans. I had somebody last night ask me, I have $100,000 in a trading account. Where do I start? Umar, you start by taking your time, learning the basics. The stock market has been around for over 400 years. It's not going anywhere. Terry, you want to look at Heinz ketchup? Okay. KHC, you're going to write that down. KHC. We'll look at that next, all right? Kraft Heinz. All righty. Thank you. You're welcome. Now, Omar, take your time. Market's been around for 400 years. Options have been around since the 1970s. That's like, was that 60 years? Something like that. All right, that being said, let's take a look. Now, 30 days ago, let's take a look at the last 30 days, which would be right here. Here's the last 30 days. Okay, Cole's high right here at 19, drops all the way down to 14, back up. Well, now we're at 1578. We're looking to get just 1% per week. Oh, great. Wonderful. Ryank sent me a request. All right, not quite sure. Anyone can watch it. Zoom on some, okay. H-Boy, what's happening? I have no idea who Ryank is. So I'm going to write no because I don't know who you are. Sorry. So let's keep on going. Kava. Been in it for a year and a half. Average is 60. Seems overvalued. All right, let's write that one down. C-A-V-A. C-A-V-A. We'll take a look at that a little bit later on, but until then, let's keep on moving forward. Now, I like Kohl's. I've been in it for quite a while. I buy it, I sell it, I buy it, I sell it. What am I looking to get? Well, currently it's at 15.28. Now, tomorrow is not enough time. Well, actually, you can. Look at this, the 15th. You can actually get 1% from Kohl's still. Well, we got 2 days left of the week, Thursday, Friday, and it's still paying 1%. Okay, right now, 15.28, this is the current price. The closest strike price is going to be the 15.50. Well, the 15.50 is still going for 15 cents per share. 15 cents per share is over 1%. All right, so let's take a look. Now, first thing we want to do, we want to get rid of this. We want to change this from single to a covered stock. So a covered call is the safest trading strategy that I know of. You're buying the stock and you're selling somebody the rights, not the obligation, just the rights to buy it from you at the exact same price you just paid for it, and collecting 1% per week. Well, 1% per week is going to equal 50% or more per year, depending on, what you're getting in. All right, so here we go. Here's the 1550s right there. I want to do just one contract and market order. And here's what it looks like, okay? Buy one covered call of Kohl's. Kohl's is KSS. The 100s, that's the weeklies, which means it expires every week. So if I buy it on a Monday or Tuesday or Wednesday, it's going to expire on a Friday. They always expire on a Friday. 6 December 24. Well, that's this Friday. Okay, this trade is going to expire this Friday, and I'm still making 1%. For 2 days. Now, 1% for 2 days, it doesn't sound like a lot. And those of you here that don't think 1% a week is a lot, well, that's over 50% per year. 50% per year is a nice rate of return. Not very many people make a consistent 50% per year. Well, here we go. Good evening, ladies. There we go. Well, I'm going to have to figure that one out. All right. 1550 call strike against the stock, KSS, at the market price to open. Here's my profit right there, $39.50 per contract. That doesn't sound like a lot. Let's find out. Let's clear this. $39.50 per contract divided by, what is the contract costing me? Well, to do this contract, it's costing me $1,511. It's not a lot of money. $1,511, and that comes a grand total of 2.6%. That's a nice rate of return, 2.6% for 1 week. That's over 100% per year. Hi, how are you? I'm back. Invest Right, how are you doing? Nice to see you back again. All right, let's see if I can do this again. right. That's not right. No, there we go. Huh. All right. We'll have to figure that one out a little bit later. That being said, we got a couple more questions here. No more questions. You guys just all signing in, all saying hi. Okay, J-Dog, why not sell puts first? Okay, J-Dog, I'm going to agree with you 100%. Hopefully that works. Okay, I'm going to agree with you. Selling a put first. It's called the wheel strategy. You sell a put, you get the stock, you sell a covered call. Okay, selling a put is basically doing the exact same thing. You're taking a big chunk of money, you're putting it aside, you're collecting a return. Okay, what's the difference? Well, a wheel, you sell the put first and then you buy the call afterwards. After that, okay, then you sell the covered call, then you get your money. But here's the thing. Why would I sell a put first? I don't know. It's the same thing. You're taking a chunk of money, you're putting it aside, and you're getting a rate of return on it. Same. You sell the put first, you put a chunk of change aside. You collect a premium. Okay? Covered call, you buy the stock, you put a chunk of money aside, and you're collecting a premium. Same thing. So why don't I do it first? Here's the reason. The trading strategy I am showing you right here, right now, was created for my 9-year-old daughter. It had to be simple. Safe, predictable, consistent, no way for her to lose. So, by introducing puts and explaining to her how, why, and when, and where to use them, could get a little complicated. So I had to keep it simple. That's why just buy the stock, sell the covered call. Simple, straightforward, 1% per week. That's over 50% per year. Once you get that down pat, then throw the puts in. It's a little complicated. All right, let's keep on going. Secretariat's in. Cool beans. Cammy, how are you, Miss Cammy? Tony, what's happening? Runner. Carlitos, puts might not pay well. Sometimes they do, sometimes they don't. But I'm going to agree with you. All righty, let's keep on going. Question, question, question. What am I selling? Ooh, I'm selling beachfront property in Nevada. Come on down. You can get your lot too. I'm not selling anything. Okay? Lost looking, nothing. Just listen and learn. Thank you there, Miss Jody. Terry Smith, Senior. I'm making same or better with less risk. All right. Cool beans. I barely get assigned. Cool beans. Amy, how are you tonight? How to follow your method. Jellyfish, how are you doing? Crash next year? Could possibly be. Jody, what's a put? A put is a little on the complicated side. Okay, where was I? Crash next year, what's a put? All right, Jody, what is a put? A put is another option. You only have two types of options. You have the call option and you have the put option. A call option gives somebody the right but not the obligation. A put option assigns wait a minute. Obligatory. It's a fucking weird name. Obligatory. That's right. Obligated. Obligatory. Anyway, a put option means you're assigning somebody who has to do something. Okay? If you buy a put, you're forcing someone to buy it from you. You're obligating them. Obligatory. Fucking goddamn word. Is investing $200 a month good? Well, Chris, yes it is. Chris, hold on a second. AJ, taxes. Oh boy. Sometimes the puts don't pay as much. Terry, you're absolutely right. Okay, J-Dog, gotcha, got it. Thank you. Joey, what's happening? Over here on Instagram. Nice to see you. All right, well, that's uploading. Let's see how it works out. All right. Okay, Chris, 200 bucks a month. Hold tight. I think the market is going to do a good certain sectors like the financial small caps. I don't think it's going to crash happen. Yeah, not yet. Anyway, if it does, there's a crash happens every 10 years. Every decade there is a crash, a pullback, a reset, whatever you want to call it. Every decade. For the last 100 years, every decade there's been some type of a pullback. Okay, it's just all there is to it. It goes up, it goes down. It goes up, it goes down. That's all it does. Sacco Mike, what's happening? Sacco Mike, nice to see you. Uh-oh. All right. So, Chris, let's take a look at your request, your question. Is investing $200 a month good? Well, it really depends, Chris. Hold tight. What is the time frame you're looking at? So what I'm going to show you, Chris, I'm pretty sure nobody's ever showed it to you because I'm just pretty sure nobody's ever showed it to you. All right, Chris, right here, this is called a weekly compound interest calculator. All right, weekly compound interest calculator. Now, it didn't exist before I actually had to create it. It's just like a regular calculator, except it allows you to make periodic deposits. It compounds on a weekly basis. It allows you to change your compound interest. Okay, so let's check it out. Okay, Chris, just for the fun of it, Chris, we're going to start with 200 bucks. All right? Now, you said you want to invest $200 a month. Okay, $200 a month. Whoops. All right. See this? Initial deposit, 200 bucks. Periodic deposit, $200 a week. Okay, we want to do it weekly. You can do it monthly, you can do it bi-weekly. Okay, this didn't exist before I actually had to create it. 1% interest per week. That's what I'm teaching here. I am teaching how to invest simply, safely, predictably, and consistently 1% per week. That's my goal. Okay, 1% a week. Okay, now let's figure out how much that would be for 1 year, compounded at 1% per year. Now, we all know that starting out with 100 bucks, okay? Sorry. Starting out with $200, putting $200 in every single month is going to come to $10,000, $10,600 for 1 year. Okay, that's how much money you put in. How much interest did you gain? $3,289. Okay, not a whole heck of a lot, but that's only 1 year. Okay, let's go 5 years. Okay, after 5 years, it's $196,000. After 5 years, $200 a month, getting 1% per week. That's close to $200,000. Well, it is $200,000. $248,000 to be exact. But your interest right here, this is just the interest alone. Okay, so let's go to 10 years. 10 years, you'd think it would be double that, but no. See, double it would be $500,000. Okay, because right now it says $248,000 for 5 years. So 10 years, $500,000, you think? Maybe. No, look at that. $3.5 million in 10 years. $200 a month, 1% per week, is over $3.5 million in 10 years. So you tell me, Chris, is $200 a month good? Depends on how you look at it. And depends on how long do you do it. All right, so AJ Chastany. Yeah, about the taxes. I love it when somebody mentions something about taxes. It tells me a little bit about them. Number one, it sounds as if you're going to go to a Rolls-Royce dealer and ask them what kind of gas mileage the car gets. think about it. Who goes and buys a Rolls Royce and asks what the gas mileage is? Just to let you know, I've driven plenty of Rolls Royces. They're not that glamorous. I've driven an '84 Cadillac that rides better than a Rolls Royce. Terry, but yeah, I like both ways. So do I. I'm assuming you're talking about the calls and the puts, Terry. All right, Jody became #1 member. Cool beans. All right. All right. Crash next year? I don't think so. All right. Where am I? All right, here we go. Simone, how are you today? You want to take a look at Apache, A-P-A. Apache. Let's try it again. APA. Okay. Looks like, Simone, Apache dropped down a little bit. I mean weak. Invest right. Uh-oh. What's invest right talking about? Okay, invest right. Can you look at the stock W? We'll take a look at it. Isn't it crazy how far $200 a month will go dividend capture strategy can go? Yeah, you're about right. And you want to take a look at W? We'll take a look at W. I don't even know what W is. I mean, I know what the letter is. I just don't know. Do you sell covered calls on your dividend stocks? Well, Anthony, of course I do. It's a great strategy. It's simple, it's easy, it's predictable. There's absolutely very little risk to it. Hey, D-Dub, obligatory. Okay, I'm not quite sure what you mean by that, but all right. Let's keep on a rolling. Apache, okay, sorry. Got distracted. Apache, the high of the year, 38. The bottom of the year looks like it's 20. Down, up, down, up, down, up. I want to look at 5 things every time I look at a stock. 5. Okay, I look at the 1-year chart first. The 5 things I want to see. Where's the high? That's number 1. Where's the low? That's number 2. Number 3, where was it a year ago? Number 4, where is it now? Number 5, trace it with your little finger. Trace it. Up, down, up, down, up, down, up, down, up. Okay, so it's coming up right now off of the bottom of the year. I love the bottom of the year because you cannot get any lower than the bottom of the year. We are way overdue, J-Dog. I have no idea what you mean. How do you feel about Trump dump? I have no idea what that means. Okay, Jody, explain it to me in a little bit more detail. Herc, hi, how are you account for earning dates in their strategy? DG has earnings tomorrow, for example. Good point, good question. Let me finish up with Apache first, and then I'm gonna answer your question about what I think about earnings. Okay? Might be a little bit different than what you're expecting, but here we go. The high of the year, the last 90 days, to just give an idea where it's going, 5 things. Even the 90-day chart, I'm still looking for 5 things. Okay. The high, the low, where was it, where is it, what's the direction? Down, up, down, up. Okay, interesting. Now I'm also looking for a repeatable pattern. Okay, down, up, down, up, down, up, down, up, down. Okay, that's a repeatable pattern. What is it doing the last 30 days? Now, the last 30 days, gives me a great idea of where do I think it's going to go next week. Because I want to buy on a Monday and I want to be out on a Friday. Okay, I grew up in the 70s, 80s, and 90s. Okay, so I went to work 8 o'clock in the morning on a Monday. Friday at 5 o'clock, wanted to get paid, go home, enjoy the weekend, and then do the whole thing all over again. All right, so last 30 days. Here you go. Apache, last 30 days. 30 days ago, 23.50, shoots up to 25, drops all the way down to 21, back up, back down, back up. Now she's coming to the downside. Sorry, Simone. Okay, the last week and a half, it's going to the downside. It's currently at 22.22 if you really like it. It's in a downturn. I don't buy things in a downturn. I buy them when they're at the bottom, turning around, going back up again. This one's still coming down. 22.22. The 22s are going for 38 cents. They're paying a little bit more, but do you really like the company? That's a good question. Do you really like the company? Okay, Herc. Question on earnings. Hold that thought. All right, November. Come on. Harley-Davidson just had its earnings a while ago. Why isn't it popping up? Estee Lauder had its earnings recently also. There we go, Estee Lauder. The 31st. Okay, now, Herc, you ready? Herc 74. November 2024, Estee Lauder had earnings on the 31st of October, October 31st, all right? Do you see what happened to the stock? Big, huge drop. Now, Estee Lauder actually beat the earnings, actually made more money than they thought they were going to make. Whale 180, how are you today? They made more money than they thought they were going to make, but the stock dropped. Well, the reason it dropped is because their projection wasn't as good as they wanted it to be. So they actually beat earnings from the previous quarter, but the projected earnings for the next quarter was down. So they got good earnings, but a bad forecast. Okay, I really don't play too much with the earnings reports because sometimes, even when it doesn't mean anything at all, look at the big drop. Well, what happened to the Estee Lauder? Did it go down? Well, it did, but we, the people, the investors, brought it right back up again. So it's coming back to the upside. All right? Get your own and paper, take notes. This is good stuff. Jody, I like that one. Check VIX OI for any pending doom. Okay, thank you for that. Now, Dollar General has earnings tomorrow. So, here's the stock, Dollar General. Okay, so the earnings for Dollar General is tomorrow. Okay, 9 a.m. So 9 a.m. tomorrow morning, they're going to do the report for Dollar General. Well, look at the stock. The high of the year is around 170. That was back in March. Okay, she drops all the way down in November, right down to like 72, 73. Okay, the stock was at a year ago, 135, shoots up to 168, close to 170, gets to here on the 30th. Okay, 90 days ago, because they have the earnings report every 90 days. So here's the last earnings report for Dollar General right here. Well, the next earnings report is tomorrow. Well, how's it going to affect it tomorrow? Okay, look, this is the last, 1, 2, 3, 4 months. 4 months. So at 125, big drop because of the earnings. Now she's going sideways, and now we have another set of earnings coming up tomorrow. What is it going to do? Well, I'm looking at the scenario where the market maker has a tendency to over-exaggerate the effect of the bad earnings. Okay, so the stock drops. Yeah, now it's going sideways. Great. What's going to happen next time? Don't know. We'll find out. Now, is that going to keep me from buying Dollar General? No, because look what Dollar General's done for the last 30 days. Right there. Okay, so here's Dollar General 30 days ago, 85. Then she drops all the way down to 72. Then from 72, she jumps up to a little over 80. Well, that's a nice move. Now, here's the thing. Doesn't give me a warm fuzzy because you're going from 72 to 80. That's an $8 increase. Now, I know $8 increase doesn't sound like a lot, but an $8 increase on a $70 stock, well, that's over 12%. Get 12% in 2 weeks. Wait a minute, 1, 2, yeah, 2 weeks. 12% in 2 weeks, yeah, of course it's going to be profit taking. So is it going to be the earnings that cause it to go down tomorrow? Or is it going to be the fact that, well, it's jumped up 12% in the last 2 weeks? I don't know. Okay, I don't even know if I have any Dollar General. All right, well, let's go to the next one. Can't see the screen, Wentworth Curtis. Now, the reason why you can't see the screen, Wentworth Curtis, because you're looking at it on your phone or your iPad. This screen here is live on YouTube, so you can watch it on your TV. Carly invites me to co-host. Unfortunately, I have no idea who Carly is. How can you tell the stock is still in a downturn? That's an interesting question. 30-day bottom, and it's going up. That basically you look at it, okay? Going up, here it's going down, okay? Down, up, down, up. It's going to continue to go up until it turns around and goes back down again. Hatton Mustache. Is it up in Dividend Stock Talks gift gallery? Anyone who sent a gift will contribute 150% Live Fest points to the live creator. I have no idea what that means. People have to pay for these types of workshops. Yeah, that's true, they do. All right. So anyway, Wentworth Curtis, if you know how I can pull up Yahoo Finance, okay, and figure out how to get the dark screen, I'll be more than happy to do it. Unfortunately, I'm technologically retarded, you know. I know how to do a few things. I don't know how to do everything. I never claim to be good at everything. I'm good at a few things. So here we go. Yahoo Finance. Yeah. I would love to be able to have the dark version of this. I just don't know how to do it. All right. But I do use it a lot. It comes in handy to show you how stocks react certain times a year. Do they pay dividends? What is the book value? What is the current yield? You know, information like that. La 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 la. Jody, missed that question. Let's go back to where we were. Here we go. Jody, so anybody remember what he said a call option means? Jody, a call option means you're selling the right, not the obligation, for someone to buy it from you at a certain price by a certain date. Now, the certain price by a certain date, well, that's right here. You call options on this side, and you put options on this side. So, you have bid, ask, the expiration date, the strike prices, puts on this side, calls on this side. Now the difference between the calls and the puts, the calls, whoever buys or sells, you're giving or buying, okay? You're selling the right or you're buying the right to buy or sell, but not the obligation. You don't have to if you don't want to, okay? That's a call option. A put option on the other side obligates you, okay? So if I sell a put, that means somebody can force me to buy it at a certain price by a certain date, okay? If I buy a put, I can force someone to buy it at a certain price by a certain date. Okay, you need 4 items in any contract to make it legal and binding. You need a beginning date, which is whenever you buy it or sell it. You need an ending date, expiration. Okay. You need consideration, exchange of money, or like in kind value. Invest right, hold that thought for a second. Okay, hold on. Fourth thing. What was the fourth thing? Wait a second. Beginning date, ending date, compensation, some kind of money or consideration. Fourth thing is a meeting of the minds. That means everything is clearly understood between you and the other person. Okay, if I am a stock buyer and I am selling an option, I know what I'm selling and the person who's buying it knows he's buying it. It's called meeting of the minds, an agreement. Okay, you need the agreement, consideration, money, beginning date, ending date. 4 things you need for any contract. Call option, rights, no obligations. Puts, obligatory. Ooh, I got it right that time. Obligatory. You're obligated. Okay? Okay, got a question over here. Invest right. I remember you saying that stocks tend to go up 2 weeks before their dividend. Is that true in trying to remember? Well, yeah. Hold on. Let me show you real quick. There we go. Right? Let's pick up a stock. Let's get out of that. Let's go to November. Let's take a look at, here we go, these companies right here. Okay, here you go. Aflac and Target. Aflac, Target. Okay? Aflac has a 50-cent dividend payable on November 24th. 2 weeks before, on a Monday, would be the 4th. So let's go take a look at Aflac on the 4th, and we'll go from the 4th to the 20th and see if it goes up. Aflac, AFL, AFL, Aflac. The 4th of November, November 4th. Okay, here's November 4th. Whoops. Let's go over to this side. Here's November 4th right here. Okay? Check the date again. Aflac has a dividend on the 20th. 2 weeks before, on a Monday. Okay? Now, if I'm looking at Nextera, NEE, 2 weeks before, on a Monday. I always like buying on a Monday because it allows me, how do you know which stocks to pick? Invest right. That is a very interesting question. How do I know which stocks to pick? Simple. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those 5 lists right there will give you about 300 companies to choose from. You take those 300 companies, you put them into a calendar. The calendar tells you exactly when they pay their dividend throughout the year. There's 4 quarters. January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. Here's the thing. You see this list here? These are all the dividend stocks. Ah, yes, I remember you saying this. Yeah, okay. Okay. These dividend stocks, the month of November is the second month of the quarter. Well, February is the second month of the first quarter. May is the second month of the second quarter. August is the second month of the third quarter. November, the second month of the fourth quarter. Okay, these stocks are paying every 90 days. So let's take a look. November, so February, let's go back to February. Now, pay close attention. Citigroup, Siri, Ford, Apple, British Petroleum, ConocoPhillips, Pfizer, Wells Fargo, U.S. Steel. November. Okay, watch. We're going to go to February. You ready? Okay. Okay. Siri, Apple, U.S. Steel, Citigroup, Wells Fargo. What did I miss? British Petroleum. Basically the same stocks every 90 days. Okay. February is the second month of the first quarter. So the second month of the second quarter would be May. Okay, see all the companies: Aflac, Target, Kroger, ExxonMobil, British Petroleum, Chevron, blah, blah, blah. Okay, let's look at May. Come on. Takes time for the computer. Okay, ExxonMobil, Target, British Petroleum, Capital One Finance, ConocoPhillips, Apple, Ford, Intel, Citigroup, U.S. Steel, same companies over and over and over again. Okay? So every 90 days, the same companies pay over and over and over again. Julie and Lender, how are you today? Yeah, baby. Gotta love that name. That's a cool name. Yeah, baby. Okay, cool. All right, so where was I? So anybody remember what he said about call options? Oh, yeah, I already did that one. Good evening, sir. Kerry Dills, back again. How are you doing? Tauris. Wait a minute. Yeah, Tornis Butler. How are you doing today? How do you start? Number one, you can't just start day one. Okay, this is your first time here. I'm really good with names. I have not seen you here before. Not a problem. Keep coming back. Doesn't cost you anything. I'm not charging anything for this. You just watch, take notes, and better yet, Tauris, all of this behind me is being recorded on YouTube. Okay, so it's live on YouTube, 2 channels on YouTube, 2 channels on TikTok, Instagram, no Facebook tonight because it's being an issue. It's having issues with Facebook. All right, so that being said, yeah, it's recorded every night, so you can go back over and over again and look at it and look, okay? But how do you start? First of all, you got to make a decision. It's a conscious decision to change your life. Because you're not going to just, this is not something you do once and you're done. This is something you change your life. You do it, I do it every day. Okay? I spend 10 or 15 minutes every day looking at my personal finances. Why? Well, because it's my money. I want to make sure it's safe. I want to make sure it's in the right place. I want to make sure it's growing. Most people spend more time planning a family barbecue than they do in their personal finances. Look at it this way. I say I teach, I share 3 different accounts. All right. I show each and every one of my trades that I made so far this year. Here they are right here. Okay. Now, at the beginning of the year, I was just sharing 2 accounts. In July, I threw in a 3rd one. So I'm showing you 3 different accounts. Here's week number 16. Okay, I made 1.19%. JD, Macy's, Abelmall. Bitto, Lowe's, Macy's, Abelmall, AEO, and Macy's again. Okay, here I made, what was that one? 1.65. So all my trades are there. I show you every single one. Now, I'm looking for a simple, safe, predictable, consistent 1% per week. Now, when I say I spend 15 minutes, 10 to 15 minutes on my accounts every day, here's the reason why. 10 minutes, 5 days a week. That's about an hour, roughly. Now, account number 1, 168,000. Account number 2, 190. Account number 3, 130. Okay, what's 1% of 168,000? That's $1,600. If I'm spending 1 hour to make $1,600 every single week, well, that's freaking awesome. Well, look at account number 2, 190,000. That's $1,900 for an hour. Okay, right here, 130,000. Well, that's $1,300 for 1 hour of work. Think about it that way. Okay, granted, you may be starting with 15,000. You might start with 20,000. You may start with 50,000. You may start with 5 million. It doesn't matter. We all start different. We are all on a different journey. Yours is no different than mine. Well, actually, that doesn't make any sense. Yours is different than mine. We're all different. We all have different amounts of money. No two of us here has the exact same amount of money. No two of us here has the same goals. Except for the Bruners. They're sitting next to each other. Keep in line. Way to go, guys. All right. Carrie Dills, good evening. How do I start Tornis Butler? Take your time. Don't be in a hurry. Keep coming back. Josh Shepard, what are you talking about putting $200 a month in? Josh, you're new here. I'm really good at names. Invest right. Yep, I started with 13,000 and up 12% from last month. Oh, cool beans. Good for you. Paco Titi, what is this $200 plan? No. It's not a $200 plan. Somebody in the audience was asking, if I invest $200 a month, is that good? Well, everyone's different. Okay, I invest more than $200 a month. That's me. There are other people in the audience that probably invest less than $200 a month. There's probably people in the audience that invest more than $200 a month. We are all different. It wasn't a plan, it was an example. Okay, I was showing a compound interest calculator. Where the hell is it? Here it is. I was showing a compound interest calculator. Weekly compound interest calculator. Now there's also a monthly compound interest calculator. Where is it? Right here. Okay. Monthly compound interest calculator. Totally different between weekly and monthly. Here's the reason. Well, monthly, there's only 12 months in a year. Weekly, there's 52. If I'm compounding monthly at 1%, well, at the end of the year, I'm only making 12. Okay. At 1% weekly, well, that's 52. Well, actually, it's 62, but you know what I'm talking about. I was just talking about a monthly interest calculator because somebody asked about it. It's not a plan. It's nothing like that. Let's go back to here. D-Dub, I was trying to help you pronounce the word correctly. Thank you for that. Yeah, it was a tough word. It's not one I use all the time. Obligatory. Oh, came out that time. Obligatory. Okay. Down with your cord on the wall. Oh, this one right here? Yeah, terribly sorry, dude. It's, I'm not a professional. This is just a hobby of mine. All right. Jody. All righty. O'Brien. Taylor O'Brien, how are you today? Conservative, how much money in dividends do you receive every month? Conservative, dividends, I don't collect very many dividends at all. I don't want to collect the dividends. Can we look at the stock W and not sure if it's a weekly options? Okay, let's take a quick look at it. Let me answer that question. Paul, how are you doing? Rockstar, thank you for your morning class also. Okay, cool beans. He was in morning classes. Oh, let's keep on going. What were we talking about? BTC broke 100 grand. Okay. Estee Lauder is in a spiral. All right. How much money? Okay. Conservative. Let's take a look. All right. Now, conservative, I'm not quite sure you understand this or not, the way I do things, because you're new here. Okay. This right here is a EX dividend calendar. It tells me when stocks are paying out their dividends. Silver Wolf, changing to dark mode on your browser is pretty easy. Are you using Chrome? No, I don't even know what the hell I'm using. What am I using? Something Wolf? Is that right? No, it's not. It's not Chrome. So, all right. So let's keep on going. What we talking? Oh, here we are. Very conservative. This is an EX dividend calendar. There's 4 dates to remember when you're talking about dividend stocks. Date number 1 is the the announcement date right here, the dividend announcement date. Silver, he has a screen as a separate live channel. Yep. Okay. Date number 1, the announcement date. That's when the company says, hey, this is so-and-so from so-and-so company. We'll have this dividend. This is when we're going to pay it. The announcement date. Pretty simple, right? Date number 2, the EX dividend date. Those are those little green dots. You see them? Those are the EX dividend dates. That is the last day the stock trades before the dividend is paid. Date number 3, the date of record. Whoever owns the stock. I realized that I've gone and that the I realized that I've gone to that channel, but he was talking about changing the glare on the monitor. Yeah, I understand that, the glare on the monitor. I don't know how to change it. I've already expressed that a couple of times. Okay, I should probably get one of my children over here or my grandchildren to come over here and fix it for me. Anyway, date number 3, the date of record. Whoever owns the stock on the date of record is entitled to that dividend. Date number 4 is the dividend payment date. That's when you actually receive your check. So the reason why this is called a dividend investing for weekly cash flow, each one of these little green dots represents a company. Citigroup, IBM, Pfizer, PPG, Siri, Wells Fargo, Walmart, Apple, ConocoPhillips, UPS, US Steel, Ford, Intel, Kinder Morgan, blah, 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 so on and so forth. Okay? Each one is a dividend. Now, after trading for about 20 years, I have found a little glitch in the system. Basically, before the dividend is paid, the stock has a tendency to increase in price. So here's the choice. Do I want to collect the dividend, or do I want to collect the premium? All right, let me explain. Aflac, okay, 21. The dividend is 50 cents, okay, 50 cents. Let's go trade Aflac. Currently, Aflac is at 108.80. So the 109s, not this week because there's only 2 days left. Let's do next week's. Okay, the 107s are going for 90 cents a share. Okay, the price, the last traded price, 106.99. Okay, 107, the very next strike price, 90 cents. So here's the question. Conservative, here's the question. You ready? If I know the stock usually goes up this time frame, okay, 2 weeks before, okay, right here, this time frame here, the stock has a tendency to go up. I get 2 choices. I can buy the stock, sell a covered call against it and collect 90 cents a share, or I can buy the stock, collect the dividend, which is 50 cents a share. And then I have to turn around and sell the stock. But the catch, here's the kicker. After they pay the dividend, the stock has a tendency to go down. So before the dividend, the stock goes up. After the dividend, the stock goes down. So if I'm using a covered call, buying it 2 weeks before on a Monday at the market price, sell it to someone for the exact same price I paid for it, collect 90 cents as opposed to 50 cents, which would you prefer to collect? Because if you buy the stock and you collect the 50 cents, well, now you're stuck with the stock, and the stock has a tendency to go down after the dividend is paid. Do you kind of see why I don't like collecting dividends? I use the dividend to tell me when the company is going to increase in value, because most of the time, not always, but most of the time, the stock increases in value before the dividend is paid. So yeah, I do collect dividends, but that's not my intention. I thought it was weekly, not bi-weekly. No, InvestRight, it's weekly. All right? So anyway, that's what. So you ask me how many dividends do I receive a month? Not very many. I would prefer to collect none. I would prefer to get in and get out within 5 days. Okay, so if I buy Aflac at $100 and I sell the right to someone to buy it from me at $100, well, I'm not making anything off of the stock. I'm not even collecting the dividend. I'm collecting the premium, and the premium is higher than the dividend. So why would I collect the dividend if it's only 50 cents, if I can collect the premium and get rid of the stock and have all my cash back and get 50 to 90, that's 90% more than you're getting? You collect the dividend, 50 cents. I'm collecting the premium, 90 cents. Who's better off? You have the stock, I have all my cash back. Your stock is going to go down after the dividend is paid. That's why I don't like collecting dividends. I use the dividend to tell me when to buy. Don't want to collect the dividend. I mean, I'll collect it if I have to. Because look, see, if I'm buying it 2 weeks before on a Monday, if I buy the stock here, sell covered call against it, get that 90-cent premium. If I hit my target, I'm out. I got my 90 cents and I have all my cash back. But if I don't hit my target, I can do it again and collect another 90 cents, somewhere around there. And collect another 90 cents if I don't hit it. Okay? That's twice I can do a covered call. Now look at this. I can do a third covered call before the dividend is paid. So hypothetically speaking, 90 cents, 90 cents, 90 cents, 50 cents. So you're collecting 50 cents, one dividend. I'm collecting 90, 90, 90, 50. And we're both in the same position. Have the stock after a couple of days. Silver Fox. Is there a resource for an earnings calendar for Dividend Kings, Aristocrats, Champions, blah, 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 outside of putting individual stock tickers into Thinkorswim? I honestly don't know. Silver Fox, I've been using Thinkorswim for 20 years. Okay, I know there's got to be something out there, because if someone can think it, someone has created it. And if someone hasn't created, well, there's something for you to create. So I don't know the answer to that one, because it's not relevant to me. Everything I need to do my trading is here on Thinkorswim. Okay, so conservative, I hope that answered your question. Michael Osborne, how are you today? Your system is brilliant. Thank you. I can take that as a compliment. Let's get out of there. Let's go back to here. And Estee Lauder. I used to have some Estee Lauder, and it got bought out. All right, here's Estee Lauder. Okay, the high of the year, 160. The low of the year, 65. Going sideways, drops down, a little bit of a hiccup, big drop. Now she's returning. She's going to fill this gap in eventually. Well, I'm looking forward to that gap filling. Estee Lauder has some really nice premiums. Look, the current price right now is $79.29. Current price, I can buy it at 80. The 80 is going for 180. That's over 2%. I like 2%. Do you have any idea what 2% a week is? That's over 100% per year. So much for your dividends, brother. You're collecting dividends 50 cents, 2% a week with Estee Lauder. That's over 100% a year. I don't see it in the spiral there, dude. Okay, I see the high here at 159. Last 90 days, okay, last 3 months, 93. Drops a little bit, shoots on up to 104. Drops all the way down to 63, shoots back up to 79.29. We're currently at 80 bucks. That's not downturn. Okay, Big Al, Bitcoin broke 100 grand. Don't really care. No concern of mine. I don't do Bitcoin. There's no possible way to get a simple, safe, predictable, consistent 1% per week with Bitcoin without having to sit in front of my computer all day. No thanks. Jaden, Dell. Earnings versus projection. Okay, see, now, Jaden, I don't really pay attention to earnings. I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. To me, earnings is just an opportunity for the market maker to take advantage of the information. This is what the market maker does with information. Okay, we are at, what is that, 87? The market maker, so Estee Lauder made the the earnings. Had positive earnings for the previous quarter, but their projections for the next quarter were down. So the stock dropped from 80 to 87 all the way down to 65. Is that right? Why should the market maker be able to do that? But look what else happened in the background. Now you can't really see it here, so I'm going to get out of this screen. And we're going to go over to this screen here. Okay, I want to highlight this area here because here's the last earnings. Okay, see the big drop? This is the earnings right there. See, the earnings right there. Now, the blue lines down here, these blue lines, that represents the average volume. So let's quickly take a look. The average volume for Estee Lauder over the last few months has been 3.6 million. Okay, see that? The average volume, about let's say 4 million. All right, 4 million. Now, look at the difference between the bid and the ask. That's a little crazy. During market hours, it's usually 2 to 3 cents. Let's use 2 cents to be on the safe side. All right? Now, on average, 4 million shares a day are traded. So let's take a look at the calculator. Okay? 2 cents a share, because this is what the market maker makes. He makes the difference between the purchase and the sales. Think of it this way. The corner store from your house, the corner store. Circle K, 7-Eleven, Quick Mart, Quick Stop, whatever. Whatever the corner store is, somebody owns it. Whoever owns that store, they buy a gallon of milk from the farmer because you and I can't go directly to the farmer. Okay? He buys a gallon of milk for $3. He turns around and sells it to me for $3.50. What does he make? He makes 50 cents. Well, because I can't go to the farmer and buy it, but he can. That's his job. The market maker's job is to provide a market to buy and sell stocks. So if on average 4 million shares a day are traded and he makes 2 cents per share, multiply that by 4 million, the market maker walks away with a cool $80,000 a day on average. Okay? So here, this day here, okay, the earnings, okay, where it met the earnings, actually beat the earnings, but the projections are lower, that caused the drop. But what else happened? Look at the amount of volume that happened that day. What is that? 28 million? 28 million shares. Just because the market maker got a piece of paper and decided to drop it. You get a little bit of information. You're talking about information being valuable. He got a piece of paper and said, oh, we missed our earnings. Okay, it doesn't look that good. That's all it is a piece of paper. Maybe 2 paragraphs. Ooh, look at that. Woo. Ah, it's gone now. 2 paragraphs. Sorry, investors, we missed our earnings. Better luck next time. What is that? 15 words maybe? Sorry, we missed our earnings. Better luck next time. Okay. What did it mean to the market maker? Well, 28 million shares, 2 cents a share, 2 cents a share multiplied by, oh shit, what did I say, 28 million? Yeah, 28 million. 28 million. Okay. Explain to me in a manner in which I will understand. It's going to take you a while to come up with the right words because every single day the average volume is 4 million. Business as usual, 4 million. The market maker makes $80,000 a day. One day, one piece of paper, 4 or 5 words, sorry, we missed our earnings. Okay, now he's walking away with $560,000. Explain to me that's not manipulation. Now, is this volume here, the 36, 65 million, whatever it is, what the heck happened to Dollar General? It opened up 79 from 72 last night, too high to buy. Sweetie Swag, how are you today? I haven't looked at it yet, okay? We'll take a look at it in a minute. But do you see what I'm talking about with the earnings reports? I don't pay attention to earnings reports because I think, this is just my opinion, I think the market maker takes advantage of the information. Now, out of these 36 million, are those buyers or are those sellers? Oh, we don't know. Okay, are those buyers saying, wait a second, he dropped it, let's jump in and buy a whole shitload? Or is it sellers saying, oh no, it dropped, let me jump out before I lose everything? I don't know, what is it? I don't pay attention to earnings. That was a long conversation to say I don't pay attention to earnings. Michael Osborne, NHI. Uh-oh, conservative. Big L because of the Jada law. I have no idea what Jada law is. Aid law. I have no idea what that means. NHI. Let's go back to where we were. What is NHI? This is the second time I've seen it in the past couple of days. Oh, that's what NHI is. Michael Osborne. No. See the t-shirt? That's a no. Why is it a no? Because I don't like monthly optionable stocks. Monthly optional stocks means I can do an option strategy once per month. That's only 12 times a year. If I'm averaging 1% for each option trade that I do, well, that's only 12 to 24% a year. Well, I prefer weekly. 1% a week, that's 52% a year. It makes more sense to me. Yannick, why did Dollar General go from 100 to 70? Earnings reports. Because the, I don't know if he's saying hi or Hawaiian. Oh, wait a minute. Where were we? I'm missing these questions. All right, right here. Rizanika. Okay. So, Michael Osborne, realtor? Yeah, no, I don't do monthlies. The numbers just don't work. Okay? You like them? More power to you. Crocs. I don't think Crocs has 20 years of dividends. I don't. But let's check. For that, sorry, but we got to go to Yahoo Finance. Now, for those of you guys who don't know, this screen is live on YouTube, so you can watch it on your big screen TV, on your comfy couch. Grab some popcorn, soda, cocoa. I don't know. Tonight's a night for hot chocolate. It's a little chilly. So we're going to put in Crocs, C-R-O-X, into Yahoo Finance. This gives me the information on how well has this company actually paid dividends. Because that's what I'm curious for. I'm not really curious. I don't want the dividend. It's just I want to know only because the dividend tells me when to buy the stock. Okay, Crocs has no dividends. That's a no. Okay, Yannick, why did Dollar General stock go from 100 to 70? Okay, Yannick, I'm going to tell you something that I'm under the impression that nobody's ever told you. All right? Stocks go up, stocks go down. That's it. Stocks go up, stocks go down. That's all they do. If you think they're going to come to your house and wash your car, take the dog out for a walk, maybe mow the lawn, trim the hedges, make the bed, put little candies on your pillow, no. They don't do that. They go up, they go down. That's it. You're going to buy a stock, it's going to drop. You're going to buy a stock, it's going to shoot up. You're also going to buy a stock, and it's going to go nowhere. Do not expect them to do what you want them to do. I only buy stocks when they're bouncing off of a bottom. Like this is a perfect example. Crocs, look. Here's your high right here, 165. She drops down to 95. Now she's bouncing up. 113, currently at 113. Does it make sense at 113? I don't know. Okay, Pacific Northwest, don't really care about Bitcoin. Okay, don't. Has no options on it. It has no regulations, so it's a no. Sorry. Wentworth Curtis. To enable dark mode on Yahoo Finance on a desktop, you can change your window settings. Select Start, Settings, select Personalization, Colors. Settings. Personalization. Colors. Choose your mode, light, dark. Ooh, let's see if that worked. Sorry, dude, didn't work. Okay? It worked on my computer. It's not working on Yahoo Finance. But thanks for that, Wentworth Curtis. And choose your mode list. Select custom. They're going to make me do it again. Shit. Settings. Personalization. I'm not seeing color. Personal. Device usage, fonts, taskbar, start, text input, lock screen, dynamic lighting, brightness effects, compatible, dynamic color, lighting on my devices on, compatible apps, the foreground, always control lighting, blah, 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 blah. Okay. Not quite sure that worked either. Nope. That didn't work either. Give it a try. And the colors, your mode list, select custom. Okay, dude, I already see there is no custom on colors. Okay, settings. Okay. Personalization. Colors. Choose your mode, dark. Transparency effect, on. Accent colors, manual. Custom colors, view colors. All right, dark, done. Didn't change it a bit. All right, so let's get off that one. All right, Will wants to take a look at Nike. We're just going to have to deal with it. It's actually that simple. Nike, NKE, NKE. Nike, here we go. Here's the high of the year, 124. Drops all the way down to 72, back up to 90, back down to 73, back up to 78. Well, we're currently at 78.35. The 78s are going for 141. The 79s are going for 1. Both of these are over 1%. But the question is, do you like Nike? It's simple. Do you like Nike? All right, well, let's take a look. A year ago, we're at 114. Tops off at 123.63. Look at the bottom, right around the Olympics. Okay, that's some nice support down here. Look at that, the 70. 1, 2, 3, 4. 4 times. It couldn't go below 70.98. Okay, fine. Shoots back up, pulls back down. Last 30 days. Okay, here's your last 30 days. 30 days ago, 77. Drops down to 72. Back up to 80. Now she's coming down. Simple. It's going to be a no this week because it's coming down. However, I will put Nike down for 2 weeks from today because it should take about 2 weeks for it to drop down to that point. NKE. Nike. All right, let's keep on going. Kyle, do you always pick the same number of stocks during the week or mix it up? Always different. Because, see, Nike's in the $70 area, okay? You have Bank of America in the $30, $40 area. You have, what do you call it? Walgreens is $9. So I can buy 1,000 shares of, let's say, Nike, and I can buy 10,000 shares of Walgreens. Same amount of money, but different amount of shares. Okay? So if I have 100,000, it's 20,000, 20,000, 20,000, 20,000. The number of stocks is irrelevant. It's the investment. If I'm putting 20,000 in, I want to get 1%. So 1% of 20,000 is 200. So whether I buy 100 shares or whether I buy 1,000 shares, my profit is still 1%. Okay, 1% is 1%. That's why I don't like numbers. I like percentages, because Tommy over there, he might have 5 million, and I only have 50,000. So he's going to make more money than I do. Okay, I'm going to make 500. He's going to make 5,000. He's making 1%. I'm making 1%. That's why I like percentages. I don't like numbers. Okay, because numbers makes people uncomfortable. I always get uncomfortable with numbers because they get someone say, "Oh, I made 30,000." Great. What did you start with? If you started with $1 billion and you only made 30, yeah, that doesn't impress me. Okay? I like consistency. If you make a 5%, 10%, 15%, great. What was the time frame? What are the other factors? What is the information you're not sharing? So when I say I want it simple, safe, predictable, consistent, 1% per week, whatever your account is, you got $100, 1% of $100 is $1. You get 50,000, 1% of 50,000 is 500. Okay, you got 500,000, 1% of 500,000 is 5,000. It's still 1%. So I don't use numbers. I like percentages. It makes everybody feel, in my humble opinion, it makes me feel comfortable. If I make 1% a week, that's 50% per year. So no matter what I have, if I have 100 grand, 50% is 50,000. If I have 25,000, 50% is 12 and a half. Okay, so I like percentages. I don't like numbers. No nickname. Your calendar is showing the actual dividend next pay date, and not the next EX date. Correct. Okay, hold on a second. Let's go back to, okay, no nickname. December 2024, that's this month, okay? As a matter of fact, today is the 4th, Wednesday, okay? Who had a dividend today? Halliburton. Halliburton's dividend was today. Nordstrom's was yesterday. KeyBank was yesterday. Tomorrow, nothing. Look what we got on Friday. Bank of America, Waste Management, General Motors, Kimberly-Clark, Pepsi, all having their dividend, their EX date, this coming Friday. BW, check Energy Transfer. Okay, Energy Transfer. I don't like Energy Transfer. Okay, and here's why I don't like Energy Transfer. BW, ready? This is why I don't like Energy Transfer. Okay, $18.99. The 19s at the money, 24 cents. Nice fat premium. I like it. One strike out of the money, 1950s, 6 cents. That's crappy. That's not even 0.5%. Two strikes out of the money, 0. No, don't like it. Okay, no. Take a look at Dell. Whoops. Okay, at the money, 260. Nice premium. One strike out of the money, nice premium. Two strikes out of the money, nice premium. Three strikes out of the money, nice premium. Four strikes, nice. Certain companies pay great premiums, certain ones do not. Energy Transfer, 2 strikes, you're out. Sorry, I don't like Energy Transfer. The numbers just don't work for me. Dayron El Cubano. ¿Qué pasa, amigo? ¿Cómo está? James, new here. Been watching for a couple of days now. What would you say to people when people say gambling? Context. How's that? Gambling. All right. Well, let me give you an idea. Gambling is usually not knowing what the outcome is going to be. If you decide to stay in bed, you're gambling that you're not going to do anything. If you stay in bed, you're gambling you're going to miss a bunch of stuff. If you're putting your money into something, well, you're gambling. Is it going to make money? Is it not going to make money? If you have no clue what you're doing. Okay, so for me, if I say I'm going to go do some brain surgery on someone, whoever volunteering to let me do brain surgery, that's freaking gambling. I don't know shit about that. But when it comes to investing, I know what I'm doing. It's not gambling to me. So when you know what you're doing, it's not a gamble. Gamble is when you're uncertain or the odds and probabilities are going against you. I don't call it gambling because I have a good idea. I've been doing it long enough that I get very good at it, and I'm not considering it gambling. That's why all my money's invested at all times. I believe in the American economy. I believe in AT&T, IBM, Wells Fargo, ExxonMobil, Bank of America. I believe in all those. the guy down the street, my next door neighbor, my cousins, my friends, my neighbors, my relatives, they all work in the American economy. I give them a call in the middle of the day. Oh, sorry, I can't talk, I'm at work. They're working in the economy, making us a better world, a better place to live. So yeah, I have all my money invested at all times, but that's me. Delron Cupid, great stuff. Love this. Keep it simple stuff. It was created for my 9-year-old daughter. It had to be simple. And it was just, adults have a tendency to complicate everything. Okay? Now, my daughter, it was simple. It was, all right, honey, this is the companies we're looking at today. We're looking at Nordstrom's, KeyBank, Halliburton, Bank of America, General Motors, Kimberly-Clark, Pepsi, and Waste Management. Those are the only ones you look at today, honey. And she says, okay, Daddy, let me take a look. She does what I ask her to do. Takes a look at the chart, the 90-day, the 1 year, the 90-day, the 30-day. Where is it going? The seasonality, blah, blah, blah. Which one looks good? A plus B equals C. It's that simple, okay? If the 1 year chart looks great, wonderful. Does the 90-day chart look great? Okay, look, nice. Okay, what does the 30-day chart look like? Oh, nice, wonderful. What do the numbers look like? Okay, I'm buying at 126, 260. That's more than 1%. It's actually that simple. Joseph, how are you doing? It's actually that simple. You pick a company, okay? You put it into the calendar. When are they paying their dividend? Why is that important? Because just before the dividend, the stock has a tendency to go up. Is it guaranteed? No, nothing's guaranteed. Death and taxes, that's about it. But is the stock going to go up? Yep. Is the stock going to go down? Yep. They go up, they go down. Look, it went up, it went down. It went up, it went down. It went up, it went down. That's all they do. All right, let's keep on going. Dun, 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 dun. Fountains full. If you don't hit your target on Friday, what do? Does it mean you made less? Fountains full. Interesting name. Let me see if I can get this right here for a second. Let's get this out of here. All right, let's look at Dell for a second. Okay, fountains full. 30 days ago, we're at 132. She went up, she went down. She went up, look at this big drop. Now she went up, down, now she's going back up again. Is that guaranteed? No, nothing's guaranteed. Does it look like it's going up? Well, your 30 days high here, your 30-day bottom here. Okay, what usually happens at a 30-day high? Profit taking. Okay, stock goes up, I want to take my profits. I don't want to hold on to anything. And I don't keep that a secret. I don't know why people keep insisting on telling me that Bitcoin broke 100 grand, as if I really care. Okay? I don't really care that Bitcoin did anything today. Okay? There's no possible. I cannot go to the store. I cannot go put gas in my vehicle with Bitcoin. Can't do it. Okay? I cannot go to Starbucks. I cannot go to Dunkin' Donuts and buy a cup of coffee with Bitcoin. Can't do it. Until I can, it's irrelevant to me. I'll keep an eye on it, but it's still irrelevant to me. All right. Do I think it's going up? It's really irrelevant what I think. Okay? Now, here's the high, here's the low. It's going to the upside, the 126, the numbers, everything checks out okay. So, if I buy it at 126, I sell somebody the rights to buy it from me at 126 by Friday. If on Friday the stock is at 125.99, well, it's below 126. That means I keep the premium and I keep the stock. And what do I do the following Monday? I turn around and I sell it again at 126. And I keep selling it over and over and over again until it hits my 126. And I get to collect this premium every single week until it hits my target. If it never hits my target, well, then I will continue to the day I die writing a covered call against that position every single week. And as it goes up and as it goes down, I will adjust my strike price. What will never change is the price that I paid for it, 126. Okay, if it drops to 124, maybe I'll sell the 125s. If it jumps up to 130, maybe I'll sell the 130s, maybe I'll sell the 129s, maybe I'll sell the 131s. It's all going to be different week after week after week. Pick a good company. Remember the 5 rules? Rule number 1, never buy something you don't understand. Never buy it if you don't want to hold on to it for the rest of your life. I like Dell. I will buy it and hold on to it for the rest of my days and continue to do a covered call every single week because the numbers just look wonderful. If I'm getting this every week, you know what? Let's do one on Dell right now and see exactly what the number is. So the number is 126. That's the current price. And she's in a little bit of an upturn. Good. Wonderful. All right, let's get rid of this. Let's change this to a covered call. And let's do the 126s. Okay, here's the 126s right there. Just one contract. What does that look like at the market to open? So basically this order right here, you see that? I am buying 100 shares. Whoops, right there. Buying 100 shares, selling one contract. I'm doing it all on one trade at the market and the opening of the day. So let's confirm and send. Here's what it sounds like. Buy one covered call Dell 100s. That is the weekly. 13 December 24. That's not this Friday. That's next Friday. Okay. This Friday is only 2 days left in this week. I've already lost 60% of the time value. What does that mean? Orchard. How are you doing, Orchard? On Monday, if I buy the stocks on Monday, sell the options on Friday, I'm getting 5 days of time value. Okay, when Monday's gone, I just lost 20% of time value. Tuesday, that's 40% of time value. Today's Wednesday. Now I get 40% time value left. Just doesn't work. So I look at next week's. So 13 December 24, that's next Friday. The 126 call strike against the stock Dell at the market to open. That's the order. The break even is 123.24. Well, the stock price right now is at 126. So anything over 123.24 is going to be a profit. All right, so stocks move 3 different ways. Based on this here, if the stock moves up, I'm going to make money. If the stock stays the exact same, I'm going to make money. And look, the stock can even come down to 123.24. That's break even. So anything over 120, so the stock can even come down a little bit, and I'll still make money. How can you go wrong? If it goes up, I make money. Stays the same, I make money. It can even come down a little bit, and I still make money. It boggles my mind. It's actually, yeah. Okay, so anyway, the maximum profit, next line down. Okay, now when I say I want a simple, safe, predictable, I want to know what I'm going to make before I even do it. Well, there it is right there. This trade will make me $276 per contract. Will it make me $300? No, it will not. Will it make me $100? No, it will make me $276. That's what it will make me if the stock is above 126 come next Friday. That's what it means. If it's above 126 come next Friday, I'm going to make $276. If I want to make more money, well, this is not the right trade for you then. I want simple, safe, predictable, and consistent. All right. Anyway, 276. Let's do some calculations. For that, we need our trusty calculator. Oh, look at that. The calculator's in dark mode. Yahoo Finance isn't. All right, let's clear this out of there. 276 is the profit. How much is it costing me to do this one contract to buy 100 shares. It's costing me 12,324. Okay, 12,324. That gives me a grand total of 2.2% for 1 week. What is 2.2% compounded over the year? Well, there's 52 weeks in a year. If I can do 2.2% every week, that's 116.4% for 1 year. Simple, safe, predictable, consistent. That's what I'm looking for. All right, well, let's get out of this one. So I actually like that trade. It's a nice trade, Dell. I like Dell. The numbers just look good. Let's get out of that. Let's change this back to there, go back to right here, and let's answer some more questions. Okay, so fountain, does that make sense? Okay, fountain's full, does that make sense? Alessa's father. Hi, James. I'm also James. Cool beans. Can't go wrong with name. James, James, Luke, John, Matthew, Paul. Can't go wrong with those names. I have a 401 Roth. Sorry about that. And I am able to invest into anything. I'm new to this. Okay, my suggestion, Alyssa's father, James, don't do anything until you practice. Practice, practice, practice. Now, here, this is Think or Swim. It is a trading platform through Charles Schwab. Now, this particular one is, see it right here? A paper trading account. This one. It looks the exact same as this. This is also Think or Swim. This is not a paper trading account. Okay? This one is not either. Okay? Paper trading, live. Okay? I share 3 accounts with you guys. Now all the numbers are what the numbers are. So, practice, practice, practice. At some point, all right? At some point, you are going to know when to put real money on the line. It's like Monopoly with the stock market. Okay, and there's a lot of trading platforms that allow you to do a virtual account or a paper trading account. So make sure you practice before you do anything. Cash price prediction. Alrighty, let's keep on going. Okay, so James, Alyssa's dad, hope that worked out for you. The father sent me an ice cream cone. Cool beans. Okay. CME, hello to you too. All right, what do we got here? Glitch. They use open interest and upload the shares against the sold calls in this example. Glitch, I really wish you'd explain that in a little bit more detail. I've been trading for 20 years and I'm a little confused with what you're saying. Delta hedge to 0, everything is a gamma play. Okay. Sounds all Greek to me, but alrighty. All right, user 5955 wants to take a look at Verizon, VZ. Now, Verizon is on my list. I don't play it every week because it's not always a good play. Like this week, not a good play. Check it out. Here's the high, 4 days to the downside. That's a no. Why? Because she's coming down. Now, I will look at it in 1 week because she's coming down now. This is 4 days. Another 4 days will bring it right down to here somewhere. From the looks of the chart. Is it guaranteed? No, nothing's guaranteed. But the look of it, look. Down to go 2 weeks to go down, 2.5 weeks to go up, 1 week to come down. So another week coming down, it'll bring it right about here, hypothetically speaking. So I'm going to write it down in my book, and I'll take a look at Verizon again next week. Because right now, it's a no. But next week, it might be. Carlita, thank you. Oh, Felix, did we look at Oracle yet? Felix, how are you today? Oracle, O-R-C-L. Here we go. Ooh, what the heck just happened? All right, take a quick look. Here's the high of the year. Here's the low. That's where it was. This is where it is. Look at the movement. Down, up, down, up. 189. The 190s are going for, holy shit. Is that right? 710? That's crazy. All right, well, let's take a look. All right. The high of the year, 195. Okay, that was a couple weeks ago. The bottom of the year, 99, and that was mid-December of last year. Last 90 days. Looking at the exact same thing, high, low, where was it, where is it, what's the direction? Up, down, up, 189. Okay, let's take a look at the 30-day, because the 30-day doesn't look as good as what we're looking at. Okay, here's the last 30 days. What does it tell you? 30-day bottom, 168. Shoots up, pulls back, shoots up, pulls back. Now she's going up. Look at this gap here. That's only 1 day to the upside. I like 2 days to the upside. Bottom here, 2 days. It's going to get too close to here. It's going to be a little icky. You like that word? Icky. So in 2 days, once this hits up, this 30-day bottom is going to drop, and this is going to be the new 30-day bottom here. And it's going to close the gap a little bit. Let's see what that looks like. A 30-day bottom, up, down, up. Yeah, it might not, but let's take a look at the seasonality. Now, for those of you guys who don't know what seasonality is, seasonality. This is a seasonality chart. All the way to the left is January 1st. All the way to the right, December 31st. We are right about here. We are in the first week of December. The blue line is this year. Look at that nice movement this year. Nice. Look at the red line. The red line is 10 years of average movement. Look at it. A year ago, nice, steady upcline all year long. No big jumps, no big drops. What's it going to do for the next week or two? Well, based on this, it looks like it's just going to continue going up. All right, that works for me. All right, so let's go back to where we were. Let's get rid of this. Now, the 189, the 190 is going for 740. So let's see what exactly that looks like. Okay, the 90, there we go. One contract at the market to open. Okay, here we go. Here's what it sounds like. You ready? Buy one covered call of Oracle 100 weeklies, 13 December, that's 24, that's next Friday. The 190 call against the Oracle stock to open, at the market to open. 181 is my break even. Well, it's currently at 189. See that right here? Break even stock price, 181.13. The current stock price is 189. So as long as the stock is above 181.13, I'm going to profit. Now, this particular trade is $887. That's nice. We'll clear this. $887 divided by, what is this contract costing me? $18,113. 18,113 gives me a grand total of, you ready for this? 4.89% for 1 week. Well, what is 4.89% for 1 week? Hold on. $280. 270. I was close. 270%. Okay? That is nice. But can you get that number all the time? No, I hardly ever get that number. As a matter of fact, let me just show you really quick. I got to get back to where he was. The way we were. All right. That's not what splash. This is what I want right here. Okay, quickly, let's go over a couple of them and see what I get on average. Okay, now this is all currently my trades for this year. I do this every year. Okay, as a matter of fact, let's go all the way down to the bottom. Okay, here, look. Here's week number 3, week number 2, week number 1, and what's below that? Oh, look at this. Starting date, August 31st, 2011. This is my old blog post I used to do. I used to do blog posts in 2011. Okay, 2011, 2012, 2013. What do we have over here? Okay, videos. Whoops, video right here. Look at March 23rd, 2013. 1-year chart, 90-day chart, 30-day chart. Moving sideways all year, last 90 day, looking at a channel close to the year high. Last 30 days in that channel, looking for a dividend to make a push upwards. Cool. That was in 2013. Uh-oh. Where can I get your tracker you use to see all your dividends for all the companies you have? I don't have a tracker. Okay, sorry. It is just available online. So all these videos, look at this one. This is an old one. That's from 11 years ago. There's me. Look at what I used to do. 1, 2, 3, 4, 5. 5 computers. That was 11 years ago. Now I'm down to just 1. I want it simple. That was way too complicated back then. All right, so as I was saying, all right, let's get back on track. We're talking about average. No, like the calendar. The calendar is on Thinkorswim, okay? Or you can just go to Google, put into the chat EX Dividend Calendar, and a whole bunch of them pop up. All right, so let's just roughly take a look at the numbers, okay? 2.12, 1.3, 0.85, 0.9. See, I don't make 1% every week. 1.03, 1.06, 1.9, 2.03, 2.32, 4.63, 3.9, 0.9, 1.2, 1.5, 1.2, 1.19, 1.19, 2.61, blah, 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 yada, yada, yada. They're all up there. Just take a look when you get a chance. Okay? Glitch, all options expire. Glitch, you are absolutely 100% correct. As a matter of fact, all options do expire, and 80% of all options expire worthless. You gotta remember that one. That's a good one. Tony Yuva. AT&T, huh? I can tell you no right now for AT&T. Not that I don't like the company. It's just at all-time high. Have you looked at W yet? Ooh, invest right. No, we haven't. W. Wayfair. No, dude, come on. Wayfair has not been around for 20 years. No possible way they have 20 years of dividends. All right, we already looked at Verizon. Wentworth, I tried, sorry. Hey, I appreciate it. I tried too. Wentworth, good, ignore me, move on. Wentworth, I'm not ignoring you. I just have a lot going on in front of me. I do get to every single question. I don't get to them as fast as you would like me to because there's a lot of people here and I can't answer all the questions that fast. Crater XRP, nope. XRP is not a dividend stock, dude. Sorry. Where was I? I missed some. Okay, yeah. Okay. Trading Mompreneur. Cool beans. Cool name. Trading Mompreneur. Got it? Plywood. I have some oddball stock tickers to share. JAKK, no. BLK, no. 86 is in the house. What's happening, dude? Verizon, way down. Today, why? Verizon's down today? VZ? Oh, yeah. Take a look at that. Well, I honestly don't know. Seriously, I don't. I don't know because Verizon, it wasn't on my list for this week. and it's pulling back. But it is on my list for next week. Okay, Robert Crocs. No, we're looking at that one. IV. Glitch IV. What the heck is IV? Implied volatility. Okay. What do you think about Toast? T-O-S-T. Okay. Toast Inc. T-O-S-T. Let's see how well Toast pays out dividends. No dividends, no thank you. Walmart, investing Jason, how are you today? WMT, Wally World, nope. All-time high. I don't buy at the all-time high. Sorry, I'll wait for it to pull back, take a look. Glitch 25 will be epic, okay. No nickname, okay, got it. You're looking at the EX date calendar, okay, cool, got it. Natasha, hold on. Ooh, invest right, 3M. We'll take a look at that. 3M. Natasha's up bad bet. Natasha takes the swing, and it is a... Uh-oh, shit, where did it go? Natasha, so how do you invest in dividends? Natasha, good evening. Dividends, it's a little bit more complicated than that. Okay, I invest in dividend stocks. A company, you got 9,743 companies. As a matter of fact, let's take a quick look. I check once a week, just for the fun of it. Okay, let's go to FinViz, F-I-N-V-I-Z. FinViz, and we're going to take a look at the stock screener. Okay, stock screener right there, and here's the number right there. 9,761. As of today, 9,761 companies that you can invest in. Half of them pay a dividend. A dividend is a portion of the profits the company makes. So if the company is profitable, they will share that profits with the investors. That's you and me. When we buy and sell stocks, we become the investors, we become the shareholders, whatever name you want to give us. If the company is profitable, they have two choices. I'm new to the channel. Are you doing cash secured puts? Not here. Now, I do cash secured puts, but I don't teach it here. Okay? Did you hear that? I don't do it here. I use a simple, safe, predictable, consistent strategy that gains me 1% per week. Now, 1% per week may not be good for you, but it's over 50% per year, and that's good for me. So, as I was saying, Natasha, half the companies in the stock market, 9,761, half of them will pay a dividend, the other half will not. Okay, now the reason why I like dividend stocks is because they have a tendency to go up in value just before the dividend is paid. So what happens then? Well, if you know when the stock is going to move, that gives you an advantage. Now I know the stock's going to go up, and I know when it's going to go up. So I can buy the stock and get whatever it goes up. Okay, not predictable, not consistent. But what is predictable and what is consistent is a covered call, where I buy the stock, I sell it to someone for the exact same price I paid for it, and I get a transaction fee, also called a premium. Okay, what stock was that? Walmart? Glitch? Mindy, do we sell when they go down? No, never sell. Mindy, rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. Ebony Jones, OMG, I just found your squeam with Thinkorswim. Cool beans, it's been there all along. Welcome to the show. All right. Glitch, what stock was that? Walmart. Oh, Mindy, okay. Benazarius, okay, cool. How old are you? Did you started investing a long time ago? Well, I'm 60, I'm retired. I started investing about 20 years ago. Okay, Natasha, how do you invest in dividend stocks? You know what? I invest in dividend stocks, not dividends. Uses dividends as indicated to look. Thank you, rude dude. Investing Jason. When you're doing the covered call, do you use a delta or stick to roughly 1% regardless? I stick to roughly 1% regardless if the stock is in an upward momentum, bouncing off of a bottom, preferably a 30-day bottom. Jeremiah Rubin. Jermaine Rubin. Trading platforms like Robinhood. Yep. Mindy, I keep selling covered calls till it sells. Rude dude, I do the same thing. That's what I mean. Like, how do you get into that? Natasha, you're new here. Seriously, the first time I've ever seen you. Okay, keep coming back. Come back every day. All you're doing is wasting your time. If you're wasting your time. If you're learning something, and if you want to do something like this, simple, safe, predictable, consistent, 1% per week. That's what I'm looking for. Now, Natasha, I created this for my 9-year-old daughter. Now, I haven't showed this all night, so let's show it now. Natasha's just dying to see it. I know she is. Natasha, hold on a second. I'm going to show you something. You'll like it. You'll find it amusing. So sit tight. Videos. Here we go. The oldest videos. And tra-la-la.
Hi, I'm Tracy, and being part of my internet website called Thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from.
There's over 20 days.
That's me. Look at all the hair I had, and it's nice brown. I got gray hair now.
That means every single day you can buy a different stock. Every single day there is a different company.
Here's my favorite part. That always cracks me up. The funny thing is, how do you keep a 9-year-old? Actually, she was 11 here. So I taught her, she first wanted to learn when she was 9, okay? 2.5 years later, now she's 11. See that t-shirt? I actually still have that t-shirt. A little older, a couple holes in it, but I still have it. Okay. That being said, I created the trading strategy for my daughter. All right. When she was 9, she jumped up on my lap and said, "Daddy, can you teach me what you're doing?" So here's the thing. It had to be simple. It had to be safe. Simple, safe, predictable, consistent, and no way for the 5 criteria. I had to create a trading strategy specifically for her, because if she started losing money, what do you think she's going to do? She's going to cry. I'm going to feel like shit. Mama's going to get involved. I'm going to be sleeping on the couch. And yes, the couch is very comfortable. Don't tell her. But you know what I mean? I didn't want to see her cry. I wanted to be simple, safe, predictable, consistent, and no way for her to lose. So the 5 rules. Simple 5 rules. Adults have a tendency to screw this up. Rule number 1, never buy something you do not understand. If you don't want to buy it and hold on to it for the rest of your life, don't buy it. That is just so freaking mind-boggling simple. If you don't like it, don't buy it. Simple. Rule number 2, never sell at a loss. It defeats the purpose of the whole game. And it is a game. Don't kid yourself that it's not. Monopoly is a game. Buying and selling real estate, it's a game. Real life real estate is a game. Real life stocks is a game. Rule number 3, make sure the company is consistently profitable. Sacco Mike, my daughter actually is a dog washer. She loves dogs, and she actually washes dogs nowadays. Her and her best friend have their own business. All right, anyway. Rule number 3, make sure the company's consistently profitable. It boggles my mind. This is where the t-shirt came from. What the hell were you thinking? People put their money into some of the craziest stuff I've ever seen. If the company is not profitable, me personally, I like 2 decades, 20 years of consistent increased profits. If the company's not profitable, no thanks. Why the hell would you put your money into it? Seriously, why would you put your money into a company that's not profitable? Maybe they're profitable for maybe they're profitable for a year or 2. I like 2 decades. Consistency. I'm 60 years old. I have no desire to go back to work. I've been working since 1973. Some of you people weren't even born then. I'm working well, I can't really say that because, work wasn't really that difficult for me. They say if you find something you like, it's not really work. Anyway. Yeah, insight, we'll get there. Rule number 4. The company has to have weekly options. I want weekly cash flow. I grew up in the 60s, I started working in the 70s, 80s, and 90s. I went to work Monday morning, 8 o'clock. I get out of work at 5 o'clock on a Friday. I wanted to get paid. Same thing here. Pam, how are you doing? Okay, same thing here. I want to get a weekly paycheck. Simple. Wait a minute, why is YouTube in dark mode, but Yahoo Finance is not? That's weird. See that? YouTube is in dark mode, but Yahoo Finance is not. Weird. All right, anyway. Rule number 5. Make sure the numbers work. What do I mean by the numbers? What can I buy the stock for? What strike price can I sell it for? Which one's the closest? What premium is that? Well, it's at 94.45. The 94.45, the 94s are going for 143. You take off the 45 cents, am I still make my 1%? Yes, I am. The 95s, 94 to 97, yep, that's still 1%. Okay, what am I buying it for? What am I selling it for? What am I collecting? Is this 1%? Yes, fine, great. What is the chart telling me? Well, Walmart is telling me, hell no. I don't buy at the high of the year, because at the high of the year, that's when people start taking profits. Now, if you bought at 81 back in October, okay, because in October it was at 81. Well, now it's at 94. That's a $13 increase. $13 on an $84 stock is about, what, 14%? Now, if you think it's not going to take profits after that, well, you keep on thinking that. Okay, so let's keep on going. What screen do you find the premium? Hey, fountain full. It's right here. Okay? It is right under the trade analysis. Okay? Now, what you're going to be looking at, if you do not qualify for options, this is what you're going to see. You're going to see the last, the bid, the ask, the high, the low, the close, just the information on the stock. Okay? You can't trade options unless you qualify to trade options. Now, a covered call is the simplest and safest trading strategy there is. Joe Sullivan, how are you today? Do you ever do covered puts in this situation? Yes, I do sometimes, Joe, but I don't teach it here. Now, Joe over here on a different channel asked me a question. Do I teach a different strategy? Well, yes, but not here. Here, I give this information away for free. I'm a nice guy, but I do have to draw the line somewhere. Okay? Now, let's continue. 86, fountain full of full option chain, used to think of some, blah, 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 blah. Okay. Kevin, okay, thank you. Share. Mike Sweeney, you only do stocks that pay dividends that week. Yeah, why? No, not necessarily so, Mike. Because what I'll do, see, you're under the impression that I buy a lot of positions. This week, I only bought 2 stocks. Look what popped up this week. Nordstrom's, KeyBank, Halliburton, General Motors, Kimberly-Clark, Pepsi, and Waste Management. That's on this list. I have a bunch of other lists. Okay? I have, look at this list. I got this list. Look at this. Goldman Sachs, Key, SU, Halliburton, Schlumberger, Mosaic, QCOM, TPR, Kia. Oh, nice. K is Kellogg's. Cool. Okay, I have a bunch of lists. Okay? But you got to remember, I'm a nice guy. I share a certain amount. I don't share everything. Oh, I see Waste Management in 11. Yes, I like Waste Management too. John Seward, see, you just lost my respect, dude. You did. Coney, seriously? Misty, big dividends? Yeah, but high maintenance management fees. That's not the only thing, John. Seriously, John, take a look at the consistency of the dividends that they've been paying. How consistently increasing are they? Do they increase every quarter? Do they increase every year? what is the what do you call it? The yield, the current yield on Coney and the current yield on Misty. You're going to be extremely disappointed when you actually look at the financial information. They're horrible. What is the website called? This website is called Think or Swim. Rude dude! Keep watching. James is great at explaining the process and his list of qualified dividend stocks. Thank you. Thoughts on Soundhound? Toasty Nightmare. Thoughts on Soundhound? No. No. And no. Those 3 thoughts. What do you think? Best dividend stocks in your opinion? In my opinion, Macy's, Nordstrom's, Kohl's. Uh-oh. Uh-oh. What did I just see? XCUR. What the heck is that? Now, there's a clue right there. XCUR. Okay. No. Right. Costco. C-O-S-T. No. Okay. User QWERTY. $989 per share. Terribly sorry, dude. I have no problem admitting my shortcomings. I cannot afford $900 a share. Okay? I could, but I ain't going to. Doesn't make sense to me. If I'm going to put $989 per share just to make 1%, I can do that with a $20 stock. I can do that with a $5 stock. Why would I take the risk of doing it with a $900 stock? That's almost $1,000. Yeah, no, thank you. Yeah, LH44, I get it. XCure, no. Hey, Brian, MU, I like MU. Micron, MU. Ooh, look at that chart. Doesn't that look lovely? Let's take a quick look at it. The high of the year, 158. The bottom, somewhere around 72. She jumps up. She drops. She's sideways. 102.50. The 103s are going for 281. That is over 2%. Now, we all know that over 2% a week is over 100% a year. So let's take a better look at Micron. The bottom of the year was a year ago, 72.74. Tops out, a double top, at 157. The last 90 days, take a look at that. Okay? Up, down, up, down, up, down, up, down. Now it's going to the upside. Love this right here. The 90-day gives me a couple of things. High, low, where was it, where is it, what's the movement? Okay? It's just basically, you know, that's it, just upwards. But it does give me a pattern. How quick does it turn? Up, down, up, down, up, down, up, down, up, down. The quicker it turns, the quicker I have to think, can I get in, can I get out? Okay? Last 30 days. Okay, check that out. 30 days ago, we were at 102. Shoots up to 114, drops down to 95, shoots back up to 106, drops down to 96. Now we're on an upward trend. The high of the 30 days is right here. The bottom of the 30 days is right here. But look where we are. We're going to the upside. We have all this space up here to go. So can I get my 1% out of this? Well, hell yeah, I can. Does it look good? Well, it does. The 1 year looked good. The 90-day looked good. The 30-day looks good. How does the seasonality look? How does it normally move throughout the year? Well, here's Johnny. There you go, right there. This is what to expect for the rest of the year. Slight upward. Slight upward, that's it. Ben Pay. Is that a bear flag? You don't make sense? Wow, really? Ben, you really want to do that to me? You call that a bear flag? Okay? You call it whatever you want. What I call it, 30 days ago, we're at 100. It shoots up to 114. A couple of days later, she's at the 30-day bottom, right around 95. Then she shoots up, then she pulls back down, and then she goes back up again. Okay? You can call it whatever you want. Check the trend line. It's trending to the upside, dude. Okay? 30-day bottom, 30-day high. From a 30-day high, there's usually profit taking. 30-day low is usually accumulation. Up, down, up, down. That's all stocks do. You can call it whatever you want. Okay? Buy it, don't buy it. Totally up to you. I like it, I will buy it. Doesn't bother me a bit. Okay, so 102.50. The 103s are going for 289, 281. What is that? That's over 2%. Over 2%. It can work. Risky. Well, it's not risky if you like the company. I like the company. Never buy. Rule number one, Ben. Never buy. I never buy something I don't like. If I don't like it, I don't buy it. It's actually that simple. If the numbers don't make sense, it's going to be a no. And I have no problem saying that's a no. As a matter of fact, I love saying that's a no so much, I actually got t-shirts made saying that's a no. What the hell were you thinking? All right. Costco, we're going to look at that one. Waste. Ooh, Trinity wants to take a look at waste management. I like waste management. Let's give it a gander. Let's give it a go. Give it a go. Give it a go. Give it a go. Waste management. No. That was quick, wasn't it? Trinity, wasn't that quick? No. Monthly optionable stock. I don't do monthlies. The numbers just don't work. It just doesn't work for me. Okay, 1% per option trade. 12 options in a year with a monthly. It's only 12 months in a year. You can only do it once a month. That's what monthly means, once a month. Weekly means once a week. Once a week is 52. 52 is better than 12. All right, sorry, Trinity. Silky Smooth, back again. What's your favorite company you own? Macy's. It changes every week. Yeah, but for the hey, Gallant's here. Dude, I haven't seen you the past couple of days. Just weekly options, not holding long term. Absolutely. Wow. So he is kind of like James Cramer. No, please don't compare. Okay, I've seen Cramer's rates of returns. Yeah, no, please don't do that. He does own Walgreens long term. No, I don't. I don't own it long term. I trade it consistently. There's a big difference between owning long term and trading consistently. Tafisco. Good evening, sir. You can trade this strategy with less than 25,000? Yeah. Holy bad guys. I sold Mara 250 strikes. Mara is a 26. Roll a 25 to 25.50 into next week. When should I expect this week to get called away if not rolled? Holy bad guy. That's a mouthful. Let's take a look at Marathon. M-A-R-A. Interesting. Interesting. Okay. The high, the low. Where was it? Where is it? Look at the movements. Up, down, sideways, up, down, sideways, up, down. Right now we're at 26. The 26 is going for 221. Nice. I like 221. All right. So you say at the 25s. I'm not quite sure why you would have jumped into it. I don't know when you jumped into it. So it is what it is. DVA is here. How are you, DVA? All right. So take a look. 30 days ago was the 30-day bottom. 30-day bottom, she jumps up, pulls back, jumps up, pulls back. Now she's turning around and going back up again. So here's the thing. In my humble opinion, you sold Marathon 24.50 strikes. Marathon is now 26. A 25 roll, a 225, a 25.50 into next week. When should I expect this week to get called away if not rolled? Now, holy bad guys, think of it this way. Here's your 30-day bottom here. Here's your 30-day top. You only had 2 days of profit taking. And you have, yesterday's one update, today's another update. It could keep on going. Great. How much further do you think it's going to go up? Look at your 30-day bottom, way down here at 16. You're getting close to 32. Okay, the high is a little over 30. At 32, that would be a 100% increase. From 16, actually it was below 16. What was it exactly? The bottom, see the low right here? 1531. 1531, a 100% increase on 1531 brings you up to 3062. Well, what's the high? The high, 30.28. That is almost 100% increase in 30 days. Why the hell would you want to keep on to it? Take your profit, say thank you very much. When you come back down to a reasonable amount, I'll jump in again. But, you know, just keep your eye on it, see what it's going to do. Hey, Drew. VAC since 78. Sold half my position yesterday and trailing the rest. Okay, Drew. That's a statement. That's not a question. Okay. We got 8 minutes left, and we are done with all the questions. I've got every single question. Woohoo! Yay for me. All right, so that being said, I'm going to shoot off some of my stocks because you guys are done. All right. KMI, Kinder Morgan. Oh, can we quick look at... All right, we're going to take a look at 3M. Dude over here wants to look at 3M. Interesting. 3M. High, low. Where was it? Where is it? What's the direction? There you go. Right there. So currently, 130.66. It looks like it's pulling back. It looks as if, sorry, dude, it looks as if it's going to be a no. Reason being, 30-day high right here, 4 days to the downside. So yeah, I would put 3M on the list for next week. You see where it's coming? The high, now she's coming down. She'll probably end up next week somewhere around 127, 126, based on what we're looking at. Could it change? Yeah, it probably will. But based on what we're looking at this moment in time. Because tomorrow night, this is going to be different. It just is. You know, it changes every day. Okay? Here's where we are now. Where are we going to be tomorrow night? Don't know. We'll find out tomorrow night. But the way that it looks like it's going to keep coming down to somewhere around here by next week. Okay? So, I'm going to write 3M down for next week, and we will take a gander at it. All right, so we have enough time to look at a couple more. You guys basically done asking questions? Good. Now I'm going to take a look at some of my stocks, if that's okay with you guys. As I was going to say, Kinder Morgan. Now, KMI, Kinder Morgan. Dividend King, it's going to be a no. Look at that. The highs here, she's pulling down. No. That was quick. Marathon, we looked at ADP. No. Same thing. Same thing as Kinder Morgan. High, it's pulling back. So give it a couple of weeks. RTX. No again. See? High here in a downturn. I'm going to put RTX for next week because she is awfully close to the 30-day bottom. She gets down here. She's going to turn and go back up again. I want to keep my eye on that one. RTX. Okay. Next on the list, Paramount. Paramount is actually on Warren Buffett's list. Ooh, look at that. Look at that nice little bounce right there. Cool beans. High, low. Where was it? Where is it? Where's it going? Down, up, down, up, down, up. $11. It's at 11.01 at the moment. 11 is 12 cents. That is over 1%. Let's take a gander. A year ago was the high of the year, 1750. Bottoms out in the middle of June. Middle of June is the bottom, 945. Last 90 days, look what it's done in the last 90 days. High, low, was, is, up, down, up, down, up, down, up. Cool, it is indefinitely an uptrend at the moment. Here's the 30-day high, 30-day bottom, it's going to the upside. You cannot, you can if you want to, but it doesn't make any sense. What I was going to say is, you really can't argue with that. But there's going to be people out there that do argue with it. Okay? 30 days ago, $10.90, jumps up to $11.60, drops down to $10.30, back up, back down, now she's going to the upside. Look how much space you have up here, but you also have this much space down here. But she's in an upward trend. Bottom, trending up. 11, over 1%. Let's see what it sounds like. Look at it and sounds like. Becca, thank you for that. La 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 la. The 11. Okay. Covered call. The 11 right there. Whew. One option at the market to open. And here's what it sounds like. Buy one covered call Paramount 100s. Those are the weekly. 13 December 24. That's it's next Friday. The 11 call against the Paramount PARA strike. How much is your course? I don't have a course. It's $100 a month. Just jump on in, join the. I'm getting down to the point. He just had a question. How do you join? It's $100 a month. I'm down to the last, I think, 15. I got 15 slots left, I think, and then it's cut off. Then no more. I'm only bringing on a certain amount of clients, and then that's it. The $11 call strike against Paramount at the market to open. The break even is $10.82. Well, it's currently at $11.01. $17 is the profit. That's not a whole heck of a lot of profit, but you're not putting up that much. Let's bring up that calculator. Here it is. $17.50 is the profit on this trade, and it's going to cost $1,083. That's not a lot, but that is 1.61% for the week. 1.61% for 1 week. The big questions, there's like 4 or 5 big questions. Ready? Question number 1. Does it make sense? That's it. Question number 1. Does it make sense? Question number 2. Do I like Paramount? Question number 3. Can I picture myself doing this kind of a trading? Question number 4. Do I like Paramount at this money, at this amount, $11? Okay, if it's good enough for Warren Buffett, it should be good enough for everyone. But that's just my opinion. Ooh, Gallant wants to take a look at Newmont, NEM. NEM, NEM, save me, NEM, where are you? NEM. I'll get you, my pretty, and your little dog, Toto, too. All right, NEM. Newmont. Ooh, that's a tough one, Gallant. Here we go. Take a look. The high, the low. Where was it? Where is it? What's the direction? Down, up, down, up, down. Ooh, that doesn't look good. 41.50. The 41.50 is over 69 cents. That's over 1.5%. Okay, well, let's take a closer look. The high of the year, 58.79. That was the middle of October. A year ago, we're sitting at 40.38. We bottomed out at 29.15, the end of February. He doesn't have a course. This is all free. This is free, yes. But my morning trading group, where I do teach other trading strategies, that's $100 a month. Stay for as long as you want. Kick back, have some iced tea, join the crowd, ask questions, get answers, all that kind of nice, neat, fun stuff. All right, here's the top. A triple top. Check that out. A triple top. Boom, boom, boom. Triple top. 58.76. And that was towards the end of October. From there, big drop. And here we go. Last 30 days. Here's our last 30 days. 30 days, 46, drops down to 40.50, shoots back up, pulls back down. Now we have 2 days to the upside. 1, 2. Not a 30-day bottom, but close. Here's the 30-day bottom right here. Up, down. Now she's going back up again. 41.50. It's a nice call, Gallant. Let's take a look. D. Jeff. We'll take a look. Hold that thought. 41.50. 41.50 is going for 69 cents. 69 cents is over 1%. But what does it normally do this time of year? Well, this time of year, normally, well, that's kind of weird. We haven't seen one of these before. Look at that. Up, down, up. That's a weird movement. Okay? Up, down, up. That's what it's going to look like for the last part of the year. If you like it. Now, I like Newmont. I would do this trade if all my money wasn't already invested. Okay, so D. Jeff, RBC. RBC. No. Sorry, D. Jeff, you're new here, and I hate saying no to new people. But here's the thing. I don't like monthly optionable stocks. A monthly optional stock gives me the opportunity to do one option per month. That's it. And if I'm averaging 1 to 2% with each option trade, one per month means 12 to 24% a year. But look at it the flip side. Weekly options, 1 to 2% per week, that's 50 to 100% per year. So here's a question you need to ask yourself. As much as you like RBC, if it's only paying 12%, and something like Macy's, Nordstrom, Kohl's, Bank of America, Wells Fargo, Home Depot, Lowe's, ConocoPhillips, Capital One Finance, if companies like those have weeklies paying 50 to 100% a year, which makes more sense? Why are you investing in the first place? Are you investing because you like the company, or you have relatives that work there and you want to support them? Great. I don't judge. But for me, it's a numbers game. If RBC is making 12 to 24, and AT&T, IBM, Nordstrom, Kohl's, Macy's, they're paying 50 to 100, well, kind of elementary, you know which direction I'm going. It's 11:32. I'm going to bed. You guys have a great night. If you really want to talk to me, seriously, be leery. There are over 28, last I counted, 28 scammers pretending to be me. Coach Joel, dude, I'm just signing off. Seriously, I am. So as I was saying, there's about 28 people pretending to be me, using my videos, using my pictures, saying they are me. Hey, Club Med Tom, how you doing? Send me your number. I'll give you a call. Fair enough. You like that, Jeff? Fair enough? Okay. Now, don't get me wrong. I like RBC. The numbers just don't work for me. I want 1 to 2% per week, not per month. Okay. Y'all have a great night, and we will see you again tomorrow. Hey, check it out. Woo! All right, it's gone. Becca, thank you for that. It's nice seeing you again, Becca. Thanks for showing up again. You guys all have a nice day, and we'll see you again tomorrow. Tomorrow. I love you. Tomorrow. You're always a day away. And come on. Come on, come on, come on now. Touch me, baby.